And for more on oil's recent trickle down, we're joined by Carl Larry, the president of Oil Outlooks. Carl, thanks for joining us tonight.
Thank you very much, Michelle.
So, Carl, oil slightly down on the Iran deal. International oil markets reacted more strongly than U.S. futures. But why is it having an impact on the oil markets, considering the preliminary deal won't allow Iran to increase oil sales above 1 million barrels per day for 6 months, and $1 million per day? That's not really such a significant amount.
You know, it's not, and I think the thing that happened today is you get a snap reaction to what happened over the weekend. A lot of people thought this was going to be very bearish. A lot of people misconstrued the facts and thought that there was going to be more oil on the market. So you had a real, like I said, snap reaction to the markets. We saw by the end of the session that some recovery was there, but I think we'll see a recovery through the end of the week.
Well, Carl, focusing a little bit on Iran and the reaction there, Iran and the West have been seemingly close to an agreement on nuclear issues in the past, only to then abandon those talks and for relations to become even more acrimonious. So given the precarious nature of any deal with Iran, if talks on a final deal do fall apart or even appear to be faltering, could oil instead rocket higher?
Well, it definitely could be more supportive. We could see it go higher from here if that fell apart. The thing to remember that even though we're not going to see oil production from Iran in the near term, what it does is it creates more spare capacity, if anything. So when there's issues like Libya or Egypt or Syria, there may not be such a shock reaction to rally the markets so quickly if we had the Iranian oil on the market. But if Iran is out of the picture, then again, we're back to any kind of geopolitical shock that happens, and we will see spikes.
Well, I'm glad you mentioned Libya and Egypt and Syria, because from a geopolitical point of view, those are still major hot points. How are they factoring into oil prices?
Well, I think there's always some kind of flux going on in the Middle East. There's always some kind of issue that's happening, and nothing's being resolved. So seeing Iran come to this point, it's interesting that this, out of all the countries out there, is getting resolved first. So the oil prices and the oil markets are going to be very tense and very jittery until we see some kind of peace across this whole Middle East. But for now, it seems to be just only Iran.
Okay, well, they haven't been that jittery as we can see. They were down over the month. They are up for the year, though, but not really that significantly. How much of an impact is natural gas and the increase in fracking or alternatives to oil having an impact on oil prices?
Well, I mean, when we talk about fracking and U.S. oil, gas, and shale, the real issue becomes U.S. economy. As the economy grows, we're going to see those prices kind of find higher and get supported. But right now, the economy is just kind of stagnant right here. We're not seeing that push that we thought we'd get to the end of the year here. And so for natural gas, for oil, these prices are going to remain low and, hopefully maybe lower from here, but stable for the most part until we see the economy back on track.
Now, speaking of the economy and the Fed, oil analysts have said that if the Fed withdraws stimulus, that's going to have an impact. So explain the relationship with regards to Fed action in oil. Why would the withdrawal of stimulus and a stronger U.S. dollar then impact oil prices?
Well, I think when you look at the Fed stimulus, people are going to think that the less credit we have, the tighter credit becomes, there's not going to be as much investment and or demand, again, for the U.S. economy. But really, when you see the Fed easing back, or I should say tapering on the easing, what's really happening here is that the economy is getting better, and we should see demand go back up. I think at the end of the day, what we really have to look for is job creation. That's the key here for oil prices to stay stable, if not go higher.
Job creation, signs that the economy is improving, and oil will go higher. But Carl, at its peak, oil was $147 in July of 2008. Do you see oil hitting those highs again? And if so, when?
I think oil will probably get back up. We're going to see it go back up to about $100, $110 within the next year. But $147 was really a perfect storm of several different things at that time. Production was at an all-time high. There wasn't much spare capacity, and oil demand here in the U.S. was at record highs with a growing China. So these things have all tapered back. We've seen the oil demand in the U.S. kind of pull back. We've seen China cool off, and we've seen spare production at least rise a little bit because of the U.S. production. So it's not going to be up there again anytime soon, unless, of course, we do see some kind of major physical disruption in the Middle East.
Okay, we're hoping not, but thank you so much for that insight. Carl Larry, President of Oil Outlooks.